What if I told you the most powerful force on Wall Street is not a trader, not a billionaire celebrity, and not someone who predicts the market? He doesn't appear on television. He doesn't warn of crashes. He doesn't chase headlines. Yet his decisions quietly determine which companies survive, which industries expand, and which cities reshape their future. While others fight over stock prices, he controls ownership. While others react to markets, he designs the system they must operate in. His name is Stephen Schwarzman, and once you understand how his power works, you'll realize something unsettling. The loudest voices on Wall Street are rarely the most influential ones. This is not a story about trading. This is not a story about predictions. This is the story of how silence, structure, and patience quietly reshaped global capitalism. Wall Street stories usually follow familiar paths. A bold trader who beats the odds, a visionary founder who builds a product, a dramatic rise, followed by a fall. Stephen Schwarzman fits none of these. He doesn't speculate. He doesn't innovate technology. He doesn't gamble on headlines. Instead, he focuses on something deeper: control. Not control over markets, but control over assets. Because markets change, prices fluctuate, sentiment shifts. But ownership endures. And that single insight changed the architecture of modern finance. Stephen Schwarzman did not come from privilege. There was no inherited empire, no fast track to influence. What he had was discipline. From an early age, he believed in preparation over confidence, structure over noise, and long-term thinking over short-term reward. At Yale and later Harvard Business School, he didn't chase attention. He studied systems. Who makes decisions? Who controls resources? Who influences outcomes without being visible? Most people want recognition. Schwarzman wanted positioning. At Lehman Brothers, Schwarzman learned how power truly works on Wall Street. Markets are emotional. Organizations are political. Capital moves toward certainty, even when certainty is an illusion. He saw brilliant ideas fail because timing was wrong. He saw average deals succeed because confidence was right. But he also saw a limitation. Banks advise. Banks facilitate. Banks earn fees. They don't own outcomes. And Schwarzman understood something critical. Those who advise power are never as powerful as those who own. In 1985, Stephen Schwarzman co-founded Blackstone, not as a trading firm, not as a hedge fund, but as a platform, a firm designed to buy companies, improve operations, and hold assets over time. This was slow capital, patient capital, strategic capital. While others chased quarterly results, Blackstone focused on decades. This was not about beating the market. It was about building something the market had to respond to. Blackstone does not attempt to predict the future. It prepares for uncertainty. Instead of asking, "What will happen next?" they ask, "What survives regardless of what happens?" Infrastructure, housing, energy, logistics, healthcare systems. These are not trends. They are necessities. Schwarzman understood that true resilience lies in owning what society depends on, not what excites it. Stephen Schwarzman is not a loud leader. He does not comment daily. He does not explain every decision. That silence is not absence, it is strategy. Attention attracts scrutiny. Scrutiny creates resistance. Blackstone operates best before attention arrives. By the time a deal makes headlines, the leverage has already shifted. Power, when quiet, compounds faster. Blackstone manages capital on behalf of institutions, pension funds, universities, retirement systems. This means their decisions affect millions of people who may never hear the firm's name. Teachers, public workers, families planning decades ahead. This is not personal wealth. It is structural influence. And structure outlasts individuals. With influence comes criticism. Some argue private equity extracts value. Others argue it creates efficiency. Schwarzman rarely engages publicly, because his model does not rely on popularity. It relies on performance, returns, stability, longevity. In modern capitalism, results often speak louder than explanations. During economic stress, many firms retreat. Blackstone prepares. Capital discipline during calm periods allows action during uncertainty. When markets freeze, assets misprice. This is not opportunism, it is readiness. Crisis does not create strategy. It reveals who already had one. The real lesson. Stephen Schwarzman's story is not about money. It is about structure. He understood that you don't need to predict the future to benefit from it. You need alignment, ownership, patience, scale. Most people chase income. He built systems. You don't need to be in finance to learn from this story. The lesson is universal. Don't chase noise, chase positioning. Don't react emotionally, design strategically. Don't aim to be seen, aim to be essential. Because influence grows quietly when built correctly. Stephen Schwarzman did not defeat Wall Street. He outgrew it. While others competed for attention, he accumulated ownership. While others predicted outcomes, he shaped them. The most powerful forces rarely announce themselves. They position, they wait, and they endure. And once you see that pattern, you begin to notice power in places that sound like silence. This content is educational, not financial advice. If you enjoy stories about how real power works behind the scenes, consider liking the video and sharing it with someone who thinks beyond headlines.